Nabil Mabed, hello and welcome to BiTV.
Hi, hello, Jean-Baptiste. I'm very glad to speak to you today.
Shared pleasure. You're the head of France, Spain, and Portugal for PGIM Real Estate. And your company recently acquired an XXL logistic platform right by Roissy Charles-de-Gaulle Airport in the Mitry-Mory area. First of all, can you give us a little background to this acquisition?
Yeah, sure. Logistics is really a high conviction asset class for us in Europe. It has really taken the lion's share in our acquisitions, really since 2019. Everywhere in Europe, and in particular in France. To give you an idea, logistics represents about half of our AUM in France today. So we like logistics. The other reason why this Mitry-Mory acquisition was really compelling to us is location. Buying Roissy Charles-de-Gaulle logistics, it's like buying a CBD office in Paris, right? So the location is really prime and appealing both for XXL, but giving an optionality also to serve as a high rotation kind of urban logistics. This location works for everything. The size of the asset, which is about 80,000 square meters, but also of the land, was really appealing to us. We're talking about 170,000 close of land in this location, which is particularly rare, especially when you know that it's barely impossible to get a new land for logistics or any new building permit in the Paris area, which is a really supply constrained location, which we like a lot. Then I would say we would have probably not had access to an asset of this quality, given the competition prior to the Great Reset of 2022. And we actually managed to agree a very compelling price, which we like. And this has been agreed in Q4 last year. So really in the heart of the dislocation of the logistics market, we already see this as making money on the buy, because we already see recovery in some of the ongoing transactions where we're still bidding. We see that the pricing started to recover and is recovering fast in logistics. And then our core plus strategy is really about buying existing assets which have cash flow day one, but which have the ability to be improved. Which I guess is your next question, maybe, right? That's why you're smiling, right, Jean-Baptiste? I'm spoiling. No, I would say
Exactly.
we like the fact that with our seller, Fnac Darty, we agreed the sale and leaseback, which allows us to improve the asset over the long term through capex, making it top level ESG, top level in terms of technical specificities, and increase the NOI generated from these assets over the years, which is really at the heart of what we do in our core plus logistics, in our core plus strategy in Europe.
Okay. Well, thank you, Nabil, for that. Well, for that first great answer for what the asset was about, and exactly that second question was that this asset has been purchased for your core plus fund. What is the strategy and what is the footprint of logistics in that core plus fund?
Yep. I mean, we run our business in Europe with three strategies, which are core plus, and value add. And the three strategies really follow the same high conviction in terms of assets and locations, market where we are active. Our core plus strategy, what it's really not, it's not a barbell strategy between buying some core assets and buying some value add, because we have funds that do this and are exclusive in doing that. Our core plus is buying assets generally in strong location, which we're not buyers of weak location in any asset class, which have existing cash flow in place, like the Mitry-Mory asset, but which we can improve through a hands-on asset management, through capex, through ESG measures, through reletting part of an asset, through changing the use of an asset to a use which optimize the value of the long term. And we have long periods. This is an open-ended strategy. So we can run the business plan over 3 years. If we are super successful, we can run it around 10 years. The objective is to crystallize the max value without the time pressure of a value add strategy where you need to be quick in delivering the value. That's what we do in Core Plus in a nutshell.
Okay, so it doesn't matter which type of asset it is. It's just a matter of time, location, and some kind of stability in the cash flow.
Yeah, I mean the asset needs to be undervalued. We like to make money on the buy, so we like to buy assets, below their intrinsic value, their fundamental value, because it's off market, because there's issues to be solved during the acquisition process. That's what we do in our Core Plus and value add strategy mainly. But then we need to have the ability to unlock the value through asset management. That's really what in the heart of this Core Plus, in this Core Plus strategy. Regarding the asset classes, maybe if this is your question, we can get to what are the asset classes which we like beyond logistics, right? I mean, we have been active. If I take the last year, we have been really active on this Core Plus and value add actually strategy in Europe, in France, but elsewhere as well. And we have been buying logistics. We have been buying residential, affordable residential, student PBSA. We have been buying hospitality in Southern Europe, and we have been buying healthcare. We are also active in data centers, and so you may, we may have announced some of these investments or are going to announce them in the next weeks. But these are really the asset classes which we see being the winning asset classes over the next years, because there are the ones which are expected to post the highest NOI growth, which for us will be the name of the game in the cycle that has opened up with the Great Reset.
Okay, well, it's a good turn point for my third question, because I would like to ask you how do you perceive that logistic market and in Europe? I mean, the whole Europe, and what role does the French market play in this European strategy you have, the three strategies you have?
I think that the reason why logistics is so much of a conviction for us is really because this combination of very powerful demand drivers. We have spoken a lot about e-commerce, with Europe being so much behind US and UK in terms of e-commerce and catching up, right? But this is not just about e-commerce. The COVID pandemic has created, this wake-up call that, just-in-time supply chain does not work anymore, and you need to have redundancies and build up more, more warehouses, to have more stocks available in the future. You have also the necessity, to rebuild the industrial capacities in Europe, and this is a strategy which is consistent everywhere, which is creating needs and which is creating competition for land. So the land that you use for a factory, a new factory, is the same land that could be used for logistics. So there's strong demand, and we like to invest in supply-constrained markets where it's difficult to get access to land and to products. And we really think that France offers some of the most compelling markets in Europe for logistics. The Paris region, the Lyon region, the Marseille region in particular are some of our convictions. We own assets in these three regions. We develop assets. We buy, existing assets to be refurbished. Because we think that over the long term, this asset class is going to post significant growth in returns, but that also this is going to be when the cap rates are going to stabilize in a couple of quarters, hopefully, one of the most compressed asset class because of these very good fundamentals.
Okay, well, Nabil Mabed, thanks a lot for your testimony, and we'll be on the lookout for other investments from PGIM Real Estate.
Thank you very much, Jean-Baptiste.